Starbucks profit jumped 87% last quarter. In the very same 3 months, revenue fell. One line in the 10Q explains both of those numbers, and it is a $536.3 million gain on a business that Starbucks sold. So what did it sell? On March 30th, 2026, the first day of the quarter, Starbucks closed the sale of a 60% interest in its retail operations in China to Boyu Capital. Enterprise value was about $4 billion. Starbucks received $3.1 billion in consideration, kept a 40% stake carried at $1.2 billion, and recognized a pre-tax gain of $536.3 million. Here is why revenue fell. Management's own bridge reads like this. The China conversion took out $776 million. Currency took out $52 million. Comparable store sales put back $524 million. Licensed stores added $95 million. Other revenue, $78 million. Net of all that, total revenues fell $133.3 million. The divestiture removed almost 6 times the entire decline. Break it out by segment and the picture inverts. North America revenue grew 6.8% to $7.4 billion, and its operating income grew 9.8%. Channel development revenue grew 21.5%. International revenue fell 34.2% because international is where the converted stores lived. Every segment Starbucks kept grew. And underneath the accounting, the coffee business had its best quarter in years. Global comparable store sales rose 7.9%, and so did the US market, on a 4.2% rise in transactions and a 3.6% rise in average ticket. North America comps rose 8.1%. More people walked in, and that is the hardest number in this filing to manufacture. The store count makes it concrete. 7,991 company-operated stores in China became licensed stores. International company-operated stores fell from 10,277 to 2,464. And yet, the total company store count actually rose to 41,304. Almost the same stores, a different label, and a very different revenue line. Now the other side of the ledger. That 10.5% operating margin was struck after $302.6 million of restructuring and impairment charges. A year ago, the same line was $20.8 million. $217.4 million of it was a write-down of store and non-retail facility assets tied to a reassessment of Starbucks Reserve and Roastery locations. Another $72.6 million was partner severance, which means there are 3 honest versions of this quarter's profit. As reported, pre-tax earnings were $1.42 billion, against $818.9 million, up 73.3%. Take out the divestiture gain, and it is $883 million, up 7.8%. Add the restructuring swingback, and the underlying comparison is $1.19 billion, up 41.2%. The reported number is too generous. The clean number is too harsh. The cash went to the balance sheet, not to shareholders. Starbucks received $3.1 billion of consideration, and in May completed cash tender offers repurchasing about $1.3 billion of its senior notes. Long-term debt fell to $11.78 billion from $14.58 billion at the fiscal year end, down 19.2%. And there was no share repurchase activity at all in the quarter. At $104.14, Starbucks is worth about $118.7 billion on a forward price-to-earnings ratio near 39.5. Model steady-state free cash flow under stated assumptions and the implied value range runs from about $35 a share to about $121, base case near 70. Run that base case backwards from today's price, and the market is underwriting roughly $5.6 billion of free cash flow, about double the trailing figure. The operating recovery is real. The price already owns it. Here is the whole quarter in one sentence. Starbucks sold a business, and that one transaction pushed revenue down and profit up at the same time, hiding a coffee business that is genuinely growing again underneath both. Watch two things next quarter: whether North America transactions stay positive without the tariff refunds and the gain, and what a 40% stake in China contributes as one equity line instead of 8,000 stores. And one more thing. No analyst wrote this. Every number came out of the filing's own XBRL tags, including the $776 million revenue line the headlines never mentioned. The same pipeline reads any filer in that format, public or private. This entire analysis was built on the RoboSystems SEC shared repository. Structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns. All queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.